Hi, my name is Deon, and this is the Bullion Vault episode number 11. Hi, Willem. How you doing?
Good and you, Deon.
Very good. It's been quite an interesting week. To just off the bat, we saw gold hit an all-time high.
Yeah, it's breached the 3,000 barrier and did it a lot sooner than I think either of us anticipated.
Absolutely. I mean, you're talking about that's first quarter. Before the first quarter is even concluded, it's breached the 3,000 mark. And interestingly enough, just came short of $3,050 an ounce with a little bit of a retraction, and it's sitting about the 3,039-ish area right now.
Yeah, and I think that speaks to, investor confidence at the moment. You can see the stock market is tanking. No other way to put it, really. Tesla's lost something like 28% of its stock over the past 1 or 2 months. Things are looking real bad, and as we usually say, investors then times of uncertainty, investors flock to gold. And I mean, I don't think we can get any more uncertain than we are at the moment.
What's interesting about that, Willem, is that again, we've anticipated the slowdown of the US economy for a very long time. And what I also love about it is each political side, be it the Democrats or the Republicans, keep blaming each other, but they forget that this mess started in exactly 1971 with then Richard Nixon, who was the US president, and then he removed the dollar off the gold standard. And since then, monetary policy has dictated the idea of quantitative easing, where they flood the market full of dollars, and that in turn has devalued the dollar. Over the last 40, 50 years, the dollar has devalued significantly, to the point of what you would have bought you 51 years ago to what it would be now is a lot less. Conversely, that same period of time, gold went from around $35 an ounce and to where it's right now to all-time highs of over $3,000 an ounce.
Yeah, and I mean, if you look at it throughout history, we're talking thousands of years ago. We're talking back to the Roman Empire, etc. And gold has retained its value since then. So, I don't think it's a case of saying, oh, gold is expensive. No, it's just currency that is losing its value more than anything else. I mean, just go talk to the average man in the street in America, ask them how they're doing, and they will tell you that, their money isn't worth much anymore.
Yeah, and I think what you do raise is very clear that the US economy is under a lot of pressure right now. There's a clear sign of an imminent recession slash maybe something even bigger. A lot of market commentators have anticipated almost a depression-like scenario. Is that possible? When? I mean, I always get asked that question, when is it going to happen? And interesting enough, it's almost the people that are invested into the stock market so they can get ready to jump out and then buy into precious metals to save their fortune.
Yeah, and then you mentioning jumping out of the stock market. I mean, I read an article about somebody who said, someone like Jeff Bezos, he's got billions, $200 billion. He can easily get your top 10 political analysts and those kind of guys, pay them $1 million each and tell them, right, tell me when to invest, when to pull out, optimize my money for the stock market, and he'll make a fortune. But you've got other guys that, don't have $200 billion sitting somewhere. They might be well off. They've got a bunch of money into the stock market. They don't have that luxury and they have to play it. So yeah, that's why it's important for them to try and predict these things. It's important for us to try and predict these things. But ultimately, that's why we're seeing gold soar, because people look at this, they see it going down, they are uncertain, they don't trust what's happening with the US monetary policy at the moment, and they buy gold.
And again, this also leads to our conversation that we had yesterday, where we spoke about the interesting things on the Minsky, Kingelberg and Minsky model, where we're going into that phase now that there's quite a large public awareness of gold and how gold is actually increasing in price, which also lends to suddenly the supply side becoming short, and therefore there's a fear that things are, and so then the prices start to elevate and start to escalate higher. And then we almost get a parabolic rise, which could lead to the likes of a $5,000 an ounce scenario.
Yeah, that's that down on the Kindle-Berger-Minsky, that would be called the mania phase, and
Correct.
that's what we saw with Bitcoin, especially when it just started going through the roof. And the sad thing is, once it starts that run, if you're not at the very front of that run, once it's sort of sitting in the middle, you're already too late, because you know the bust is going to come at some stage, and it's going to have a big correction, because it's unsustainable to just have it keep climbing and climbing and climbing in value. At some point, it's going to pull back, and usually people sort of buy towards the end of the mania phase, and then that pullback hits, and they lose it. They lose a lot. Some people lose everything.
I think where gold differs on this specifically is it is a money, it's considered as a top five currency globally. So all reserve banks utilize gold as a hedge against inflation and general economic and political uncertainty. So, is there a fear that it will shoot to a high price and then completely collapse down to $35 an ounce?
Not as bad as tulip bulbs or Bitcoin, but I mean, never say never. We're looking at a history of 5,000 years, and gold has never collapsed to that level. So I would say it's a pretty safe bet.
Yeah, and I fully agree with that. I think gold is, as far as a lot of that, we use the Kindleberger Minsky model to just make people aware of what's happening in the markets. That gold has got a lot of spotlight on it. You see it in the publications that has been reported in from your financial publications, which generally will always talk about the gold price. But now suddenly it's become more into mainstream publications, which are your general Joe average man in the street is now starting to read this, what like Sunny about gold, and we're not made aware of this.
Now, definitely, that on the one hand, and the other hand, since I've been a little kid, every time the news came on, they had the financial indicators, they had the rand dollar price, they always had the price of gold. And it's something you hear every single day, whether you're consciously listening to it or not, you hear it. And you hear it go from 2,000, 2,500, 3,000. You're going to take it, it's going to grab your attention, and you're going to suddenly notice that.
And what's interesting with that also is that we look at just where the pricing is now. And we're going to talk about it towards the end of this podcast, where we're going to bring in the South African scenario with the new increase in VAT. But this does play to the other thing that mitigates a lot of wealth loss is to buy gold for that specific reason of holding value of one's wealth. But I think let's just park that for now. And then I just want to go back into silver. So we saw at the beginning of this week, gold hit a nice all-time high, but silver did this very similar thing.
Yeah, it's like we always say, silver follows gold and then outperforms it. Now, the interesting thing is we had silver, which was, I think, around about almost $35 an ounce. And that's actually more significant than a lot of people realize. Because if we look at history over the past 40 years, actually, I think even before that, silver has only surpassed $35 an ounce twice before. And each time it did, it almost hit $50 an ounce a bit later. So that's the thing of we see gold going parabolic, and we're going to see the same thing with silver just a little bit later.
And that's an old story, and we have spoken about this also at length. That if you look at the start, the both commodities over a long period of time, that generally in these times of uncertainty, gold tends to be off to the races early and gain some nice momentum. Silver is always a little bit slow to start, but time and time again through the different decades, it starts to catch up to gold in percentage and then surpass it.
And the other thing we need to remember about silver is it's not just a precious metal. It's not just money. It is actually an industrial metal. You see silver in a range of applications, electric vehicles, power generation. You see it in medicine. You see silver in just about everything you can think of. And therefore, while gold is mainly focused on a supply and demand sort of type of scenario with investors coming in, buying it as a safe haven, it's an asset. Silver, on the other hand, has a bit more going for it than that. It also has the supply and demand, but now it has the industrial supply and demand as well. And that also, that's why silver is a little bit more erratic than gold, why it's up and down, because of that industrial component that is attached to it as well. And yeah, it's actually quite interesting how stable silver is at the moment.
You know, you've just taken the words out of my thoughts, literally, because if you see over the last couple of years, and we've been keeping a good eye on silver since 2020, and initially it hit some nice peaks where it broke 30 and then would drop and break into the high teens and even go to the mid teens and then go back to the mid 20s, and very erratic. But yes, last year we saw a difference. We saw silver consistently sitting in the mid 20 range band, be it around 28, dropping to around 24, 23 minimum, but it always maintained that band over the year, and was, for me, was quite a clear indication that we were due for something big on silver.
Yeah, and as I said, that $35 mark is quite a big one, because if it can get above the $35, sustain it above $35, then I think we're definitely going to see a run towards the 50, as we have seen both times it's done it in the past.
Just out of interest, any other thoughts on silver that for you personally?
Well, we talk about the gold silver ratio. Now, what that is basically how many ounces of silver would you need to sell to buy 1 ounce of gold? And historically, well, it's been as low as 12 and it's been as high as 112 or something like that. Now, interesting fact time. So, if we look at the gold silver ratio, if we look back to the Roman Empire, it was fixed at 12 to 1. So, 12 ounces of silver equals 1 ounce of gold, because they were using it as actual currency, as actual money. So that was the fixed ratio. And it sort of maintained a ratio roundabout there for a very long time. And then we saw, as you said, Nixon removing the gold standard from the dollar, and suddenly it was unleashed. And since then, it's been going absolutely crazy in both directions. As I said, we've seen it over 100. We've seen it very, very low. And the interesting thing about the gold silver ratio is, or the point behind the gold silver ratio is, it gives you a good indication of when to buy. And usually the rule is, they've got what they call the 80-50 rule. If it's above 80, buy gold, buy silver. If it's below 50, swap your silver for gold. So now I did a little bit of research into this 80-50 rule, and over the last 40 years, had you followed that rule, let's say you started out with 1 ounce of gold, and every time it went above 80, you traded that gold for silver, and every time it went below 50, you traded that silver for gold. You would have made, in 40 years, you would have made 7 trades.
Sure.
So, however, your 1 ounce of gold would have become 4.9 ounces of gold just by swapping it out. And now we have to remember, it's not just, you say, a 400% increase in what you own. Now you have to factor in the price increase in gold as well, and it becomes quite significant.
That's unbelievable. I mean, we look at the current ratio, and I think it's sitting around about 89.
It's just under 89 today, if I'm
Yeah.
correct.
And just for the listener, what that means is it's 89 ounces of silver to 1 ounce of gold.
That's correct.
So on the gold silver ratio, as you mentioned, and right now sitting around 89, it is very clear that silver in relation to gold is undervalued.
That's 100% correct. And when it is undervalued like this, that is usually the signal to buy.
And this is the interesting thing. We've seen silver hit that 35 mark, $35 an ounce mark. And yet, in relation to gold, it is still undervalued. So this still shows that there's a lot of value and there's a lot of growth still to come from silver.
Yeah, as I said before, if it can breach that $35 mark and sustain it just above it, then I think that run to 50 is on the cards.
I think it's imminent. And interesting enough, I was listening to one of the market commentators, people that we also follow, and he was making it very clear that this is the time where we're going to see silver break out. And we've been anticipating this also for the last however many years. But as I said, the key factors here, it was the stability of silver through 2024 and how it's reacted going into 2025.
And I also think market demand. You know,
Yes.
we've got so much more technological advances than say 40 years ago. There's so much more that is relying on silver and vast amounts of silver that wasn't there 40 years ago.
And again, we've spoken about this before, where silver, as far as the supply and demand perspective, the demand's been higher than the supply. We know within the photovoltaic market, it's been running at a 20% growth per annum. We know that the demand for silver has been high. And even now, we do see that there are deficits on supply, which leads to that price continue rising.
Definitely, and the main reason for that is because generally silver is a byproduct. You know, they don't go out and mine silver. Silver is a byproduct from mining gold, from mining other minerals. And if you look at the biggest producers of silver, I mean, I think it's Brazil, China, and something, or one very strange Peru or something like that, I think. If you look at all of those countries, you know, it's not what you would expect in general, and that's because it's a byproduct. It is not actually specifically purposely mined, and that also carries over into the supply chain. You know, they don't specifically go looking for it like they specifically go looking for gold. They get the silver as a byproduct. You might get worse, or you might get better, or and that will definitely have an impact on the actual demand, on the actual supply side of silver.
You say that, and what's quite interesting is even, and I know this through bulk bullion gold deals, where generally gold is sold in a Dory bar at around 89 or 86%. And majority of the time, the byproduct is silver, and there's never ever any value added to that silver. It's just purely the gold.
Yeah, and that's the thing is you're paying for the gold, you're getting silver extra. I mean, there's some cash to be made there.
Well, it's becoming more and more, it's becoming more of a commodity that needs to be, and the attention needs to be made to for it. And I think it's got a very strong case to continue the growth. And as we mentioned, I think a breakout now is very clear. It's on the cards. We've been speaking about it for so many years, and I think we are getting to that point now that we are in that territory.
Definitely, I think all things point towards silver having a bull run at the moment.
So just on silver, as far as interesting facts. I mean, we've mentioned it before. We know that it is an industrial metal, but second to oil is the most used commodity on earth. Any other interesting facts that would maybe really lean towards its relevance in the world we live in?
Well, silver is an excellent conductor. In fact, it's the best conductor. It has the best electricity and heat conductive properties of any element, and therefore it is vital to electronics. Now, electronics, as we know, is vital to the green movement. We're talking photovoltaic panels, we're talking wind turbines, we're talking all those kind of things, the green energy, the green movement, electric cars. It's all relying heavily on silver. And because of these properties that silver have, this electricity and heat conductive properties that it has, it is very much in demand. And as that sector grows, the demand for silver is going to grow.
Yeah, and again, we've always been a big supporter of silver because of its price point into the market. It is accessible to the average man in the street. In context, an ounce of gold in dollars is 3,000 and just short of $50 an ounce. The same weighted product, an ounce of silver is 30, just under $35 an ounce. So there's a massive difference in the gap. So it does make it affordable, and we've spoken of that amazing story where the guy was walking the streets. You could buy a 10-ounce silver bar or a bar of what chocolate was
It
that?
was a Hershey's bar.
Hershey bar. Yes. And again, so it's a novel thing, but there's still it's so accessible to the man in the street. So again, when people say they don't have the money to be investing and looking for these things, silver allows itself to be accessible on smaller monthly purchases and building that nest egg up.
Definitely. And I mean, the thing about silver is, we, for instance, sell anything from 1 gram to 2 kilograms of silver. And that's the thing, you might think, oh, I don't have the money to invest in bullion, but a half ounce or a quarter ounce of silver is going to cost you 300 bucks. That's going to McDonald's and buying yourself a Big Mac or two. It's really the beauty about silver is that it's so accessible, and it gives literally everybody on the street, everybody who's got 100, 200 bucks to spare, the opportunity to actually start investing in bullion.
So just, I want to close off this sector before we move on to the South African budget speech and just unpacking the VAT increase. Any other thoughts with regards to gold or silver or the gold silver ratio?
Yeah, as we've mentioned many times before, it's uncertainty drives the bullion price. And right now, as I also mentioned, I don't know how much more uncertain we can get. I'm uncertain of how uncertain we are. And there's wild things happening, and that's why everybody is turning to bullion. And I think we are far from seeing the end of this run. I think the gold silver ratio will close up a little bit. Probably not significantly to the point where you start trading to gold again, not below the 50, but I think it might dip back to the 80.
Well, it's interesting. We must actually look at that is if it had to have gone down to the 50 ratio, what that actual value in silver would be, as an ounce value.
Might be an interesting exercise, yeah.
Again, we will have a look into that, and we'll come and discuss that just next week, where we can actually look at the numbers and figures of what a 50 to 1 ratio would actually mean in silver as far as growth.
Yeah.
So going straight into it, and I know we had mentioned the budget speech, and we were due to speak about it, and suddenly there was this tabling of 2% increase in VAT, value added tax, which is a tax that's applied across the board onto all goods and services, and every single South African then would have to pay that increase. There was a massive pushback from all other political parties saying, not a chance, we will not accept that, and so on. What it for me really is highlighting a concern, and we've spoken at length and many times, is there is a problem with South African Inc. Right now, as a country, or if we had to put it into a company, the revenues versus expenditures are not equaling out. And in fact, our expenses are far greater than our revenues right now. And let's not forget all the loans that we've taken on, where we have to literally be paying off the interest at these points. And those are all creeping up as far as our expenses, including a government sector, which for every 5 taxpayers currently, one is a government employee.
Yeah, it's quite the picture. I mean, during COVID, we actually had all the South African Revenue Service actually had quite a good time. They were collecting massive surplus from companies that they weren't expecting, and as a result, things were looking quite rosy. Now, however, they're not getting that massive income from the companies anymore, and so now we're back to relying on individuals to collect that tax, and that's where it starts falling flat because they estimate they are short or they haven't collected I think 800 billion rands in tax from individuals this year. So that's just tax dodgers, people who don't pay the tax that they should, etc., etc. And I mean, 800 billion rand. It's nothing to sneeze at.
No, but I also think it highlights another problem is there is a lot of discourse within the South African population where good citizens see their hard-earned money, where tax evasion, and let me make this clear, I'm not saying it's right. And it is important to pay your taxes, and it is important to make sure that those are then utilized to cover social services, road maintenance, and all those kind of things, beefing up of state infrastructure. However, we know that that's been a massive problem. All your municipalities, which are state-owned institutions, plus your SEOs, the likes of Eskom and SAA and Telkom and so on, all of those have been failing companies, for a lack of a better word. And here we go, as a taxpayer. I think there's a lot of people that are disgruntled that if they could find any way to avoid paying tax, they will, or just not pitch up. Yet there are legal consequences to that, and again, I don't suggest that it is warranted, but I can understand it.
No, definitely. And I mean, especially since we're seeing things like petrol price increase. I mean, how much of the petrol price is just pure tax?
50%.
There we go. And then we're seeing electricity price increases. Eskom that just wants, and it's not like they want 1 or 2%. No, they want 30%. They want 60%. They want insane increases in the electricity price. And then, as you said, people are sitting back there and saying, no, but why am I paying income tax then? Where's that money going if this is the increases that we're facing in literally every sector of our lives? I mean, where's that money going? What's happening? And you mentioned it earlier, we've got substantial loans. We're sitting with a debt to GDP ratio of, I think, was 76%. Yeah. Now, if you look at developed countries or developing countries, developing economies, it's sort of recommended that they stay below 40. We're almost at double that, and I think they said it was under 60% to remain sustainable. We're way beyond that. We are literally drowning in debt, and the government has to service that debt, and then what's left over gets misappropriated or snuck into the pockets of someone or something, and suddenly they find themselves saying, oh, but hang on, we have no money. And how are we going to fix this? We're just going to tax everybody a little bit more, 2% to the VAT. And that's why the other party said, no, sorry, you can't do that.
So back to that. So the 2% was flatly pushed back and said, not a chance. They subsequently came back and said, we're going to increase it by 0.5% this year, and then 0.5%, I think, next year, and so on. So I think that's effective from the 1st of April or the 1st of May.
I think it's the 1st of April.
Yeah.
We might both be wrong.
No. It is April. Okay. Yeah. So again, 0.5%, it seems nominal, but understand that 0.5% applies to every single thing we do, be it from filling up a car with fuel, be it from buying food, be it from paying for your house, be it from any goods or service in rands, you'll be charged VAT.
Yeah, and once again, it's a cent here, it's a rand there, but at the end of the month, add it all up and see where it goes.
And again, the biggest concern here is, and I know it's South Africa with our grey listing, there's been this reform with the FIC, the Financial Intelligence, to try reform us to get us into better credit rating. But a lot of what's happening is it's almost as though we try so hard, yet there's so much rot that's been allowed to ruminate for so many years, that the likelihood of us actually getting out of this or having a stronger economy is becoming less and less and less.
No, definitely. I mean, but I think you hit it on the head when you said we are trying hard. And I really do think they are trying hard. And it's just sad to see that this work that they're trying to do is being undone by stuff like corruption. And rooting out corruption, well, geez, good luck. I don't think any country has ever managed to do that, to root out corruption 100% in the government. So, but we can hope. And the funny thing is, despite all of this, despite where we're sitting with the budget or with our debt to GDP ratio, despite everything, the rand is actually doing well. It's sitting, I think, just over 18 at the moment, dollars rand to the dollar at the moment. It's actually really doing well.
Again, I do think that's short term. I think with the global economy is not looking great. Uh, emerging economies, uh, currencies become quite appealing to a lot of investors, especially internationally. So they end up starting to buy rands or buy bond related rand hedges to make sure that they can benefit from the actual currency's growth upward or downward, because it has been very erratic. So we're now looking at a scenario where, and this is kind of where I am concerned, is we are not servicing our debt. We're getting to a point where we almost drowning literally in the debt. The government is trying ways to increase revenue, but it's ways that are not constructive. It's not really growing the economy. To increase jobs and put them into government sector is not helpful. Yes, you've got an X amount increase in jobs, but what sectors is it? Is it into manufacturing? Is it into sectors that truly show real growth and real revenue bringing in?
See, once again, and I think America has just proved this to us. A hatchet job doesn't work. You can't go in there and make radical changes and force things to change. It's not going to work out well for you. So it's something that needs to be planned. It's something that needs to be implemented intelligently over a period of time. You're not going to fix this overnight. And that's the thing that's I think what we need to be more careful of is jumping in, trying to make drastic changes, rash decisions, and end up doing more damage than good.
I do believe some reform needs to come. If we are to see South Africa flourish, and again, it's my country. I love it. I love being in this country. And what's interesting is I've got a number of people and associates that I know that have been based overseas for many, many years, and high net worth individuals, and they're all flocking home. They're all coming back to an economy which we complaining about with all these things, and the general discourse of lack of traffic lights that are functional, potholes and load shedding and water restrictions and all this stuff. And yet these people are flocking back from the UK, from the US, from Canada, coming back because they believe the opportunities here are far greater.
Definitely. I mean, let's face it, there are still great opportunities. ESCOM, well, you know what? I'll give them kudos. Well done. Load shedding has been significantly reduced. So progress. And yeah, but we're going to need to see a lot more progress before we can truly say that we are on a 100% stable and great path forward.
So I think just in closing, and again, there are no quick fixes for where this economy is. But again, if you look at the global environment, the US economy is not great. Throughout Europe, the economies aren't functioning effectively. They've got a different scenario where they've got an aging population and they don't have enough people to be taking over a lot of those jobs. I mean, you can go and buy homes or go and live in certain areas in Europe, and they will actually pay you to go and stay there because of their aging economy.
Send me a list.
I will send you that list. But it's and that's the thing, is it's a different scenario, but we're also dealing with all this uncertainty. And yes, it seems like Donald Trump is speaking sense into Russia and the Ukraine thing, regardless of which persuasion you are, be it pro Russia or pro Ukraine, it doesn't really matter. But the fact is, he is getting them to actually do a ceasefire. There's some kind of thing happening there. Does that lean towards things getting better? I still think that globally things are going to get far worse over the next probably 5 years.
Well, we'll have to see what happens with that because yeah, I'll believe it when I see it, I'll be honest. But anyway, yeah, this is the thing, and globally we've got these issues, and once again, there's no quick fix. There's no printing $1 million for everybody and everybody's rich and happy. It doesn't work that way, and it's going to take time. It's going to take effort, and if we don't start somewhere, obviously we're never going to get there. And the good thing is that it seems like we trying to get that ball rolling, especially here in South Africa, to try and get back on the right track.
Willem, thanks for your time. Just with the listeners, if you may just give them the general rundown of what they need to do if they would like to continue subscribing to us.
If you enjoyed the content, please leave a like, share it, and if you want to see some more, be sure to hit the subscribe button, and we'll see you guys in the next video.
Take care. Bye bye.